What's happening, everyone? Welcome back to the channel. I hope you're having an amazing day. Something big just happened across the crypto market, and it slipped right under the radar for most people. While social media is still filled with fear and doom, the charts and the liquidity data are telling a completely different story. So if you don't ever want to be the person who says, "I wish someone told me earlier," stick with me until the end. A sudden market shift. Today's price action across major cryptocurrencies wasn't just a nice bounce. It was a coordinated surge. Bitcoin lit up with a strong impulsive move. XRP pushed up with surprising strength. Some older altcoins jumped even harder. But here's the strange part. The fear and greed index is still stuck in extreme fear. That combination, extreme fear plus strong upside candles, almost never shows up at random. It usually appears right before a major trend reversal begins forming quietly in the background. This is the type of behavior you see before the rest of the market wakes up. Total market cap, the real story. The total crypto market cap just reclaimed a major zone, crossing above the multi-trillion-dollar mark again. This wasn't a slow drift, it was a sharp return of liquidity. And here's the part most people miss. We're starting to form a higher low and a potential shift back into a bullish structure. Once we get a solid daily close above the next major resistance, the entire market structure changes from relief bounce to confirmed reversal attempt. This is exactly how big cycles restart. Bitcoin's setup. Bitcoin is printing something we haven't seen in weeks. Higher lows on the 4-hour A tightening range, liquidity returning after the recent flush, and a return to the same resistance zone it failed earlier. There's one price level that matters right now. If Bitcoin closes above that level on the daily, we formally begin a new phase in this cycle. This is textbook bottom formation. Not guaranteed, but very familiar. XRP's structure. XRP is showing its own form of strength, higher lows, clean structure price pushing directly into a major resistance zone. One critical level stands out. If XRP closes above this level on the daily, it opens the doors to a multi-month breakout. But keep in mind, XRP has a handful of old highs stacked close together. So when it breaks, it doesn't just drift upward, it tends to accelerate, because those layered levels trigger short covering and fresh momentum. All right, so let me walk you through something that honestly caught me off guard today. I was looking at the charts, checking the usual market behavior, and suddenly something weird popped up. And trust me, this part might make you raise an eyebrow too. So here's what happened. A bunch of ETFs, and not just the regular ones, even the leveraged and spot products, suddenly showed a spike in volume. And the funny thing is, this happened right after the market dipped. Yeah, you heard that right. Not during a pump, not during a hype wave, after a dip. And I remember literally thinking, wait, what? Who's buying this aggressively right now? Because here's the thing, institutional money. They don't chase FOMO like retail does. They don't panic buy. They move only when something deeper changes, something structural, something invisible to the average viewer. And guess what? Something did shift, and here's the part almost nobody is talking about. And honestly, when I realized it, I almost laughed because it's so obvious in hindsight. The Federal Reserve, yes, that Federal Reserve, has quietly flipped the liquidity switch. I know, it sounds dramatic, but hear me out. For almost 3 years, the Fed has been sucking liquidity out of the system. Quantitative tightening, draining capital, tightening conditions, all of that. But that drain has now stopped. Completely. And not only has it stopped, but the Fed has already pushed billions of dollars back into the banking system through overnight repo operations. Billions. Not millions. Billions. And historically, and this is backed by decades of data, whenever the Fed starts putting liquidity back into the system, a very predictable pattern unfolds. Tech stabilizes, risk assets rebound, and crypto, oh man, crypto just takes the lead because let's be honest, charts don't magically start bull runs. Liquidity does, and right now, liquidity is quietly turning upward again. Now, why does all this matter for XRP and the broader altcoin market? Well, here's where things get interesting. Whenever liquidity expands faster than Bitcoin, alone can absorb it, and this happens every cycle. The extra liquidity spills over into altcoins, and that's usually the moment you start seeing those crazy moves, 20%, 40%, even 100% jumps that come out of nowhere. And if you watch the charts closely, I mean really closely, Bitcoin dominance is starting to round out. It's losing steam. And when it finally breaks down from that high zone, historically, altcoins just explode. Every single cycle. And right at the center of that rotation, XRP. Yeah, XRP is positioned unusually well this time. And not just because of excitement or hype. It has regulatory clarity now. It has one of the most loyal, stubbornly strong communities in the entire crypto space. Institutions are quietly watching it. And the chart has been coiling up for years, building energy like a spring that just refuses to stay compressed. So when liquidity expands and structure aligns with it, XRP isn't the kind of asset that moves slowly. It moves fast, like really fast. And if this liquidity shift continues, and it's just starting, we might be witnessing the opening seconds of something much bigger. All right, let's talk about something that most retail traders honestly just never see. And I don't blame them because the institutional side of the market is a completely different universe. Retail investors, they react emotionally, fear, panic, hype, excitement, sometimes all within the same hour. But institutions? No, they don't move like that at all. They're watching something entirely different. They pay attention to regulatory clarity, they look at settlement infrastructure, they analyze liquidity corridors and actual cross-border payment rails. And of course, they care about long-term adoption cycles, the kind of things retail barely glances at. And here's where it gets interesting. For months now, XRP has been showing a pattern, a very specific signature that only appears during stealth accumulation. Not hype, not FOMO, but quiet, strategic positioning. You can literally see it on the chart. Stable bids sitting under the price, low wicks, steady absorption of selling pressure. It's the kind of activity where you almost want to say, hold on, someone knows something. Because this is exactly how strategic money behaves when it's getting into position. Now let's zoom out for a moment, because the macro environment right now is, well, let's just say it's under a lot of pressure. We've got rising global debt, currencies acting more volatile than usual, legacy systems settling payments slower than they should in 2025, and cross-border transactions becoming more expensive and more inefficient. And whenever the global financial system starts feeling this kind of strain, the demand for real-time digital settlement goes up, not down. And that right there, is the environment where XRP quietly shines. It's not trying to fight for attention, it's simply filling a need, a real practical structural need in the financial system. So where does that put us right now? Well, the positioning phase, that silent, boring phase where smart money accumulates, that part is almost done, and you can already see the early outlines of the expansion phase beginning to form. All the major signals, macro, regulatory, liquidity, technical, they're starting to line up like puzzle pieces snapping together. And here's the thing about moments like this. The bottom never announces itself. The charts always turn before the headlines, and the biggest opportunities show up quietly, almost silently. By the time the masses wake up and say, wait, what's happening? The move is usually already halfway through. Now, quick reminder, this isn't financial advice. This is education, analysis, and perspective from someone who watches these patterns closely. But if there's one truth you should walk away with today, it's this. Markets don't reward reaction. Markets reward preparation. And if you want deeper explanations, step-by-step breakdowns, and the type of structured insight long-term investors use to position themselves before major moves, you'll find everything you need linked in the description and pinned comment. Thank you for watching, and as always, I'll see you in the next update.